Hello traders, it's Greg from Master Trader. I wanted to show you a trade today, very short-term trade, profitable trade that's set up after watching the activity for a while and deciding that a low point in the broader markets was made. Often not an easy task as prices are trending lower throughout most of the day. At some point, prices do get extended. What appears to be extended at certain points can become more extended, and a lot of traders get run over trying to pick off the low and trying to trade, what appears to be at certain times a significant turning point. So one of the tools that we use is options activity. And here I'm showing you the S&P 500 SPX and looking at the options activity. When we view charts, we use an option activity here, but any chart is a representation of what the majority are thinking, what their bias is, and what they think is going to happen. So as we look at the daily chart here, we see a breakdown, we see a gap up today and a reversal, and that suggests prices are going to go lower next week unless they can get above today's high. That's easy. And we look to the left and see, hey, where's it likely to go? That 200 MA that's lined up with that support. However, during the trading day, we see prices are trending down. They originally gapped up. They were going sideways for quite a long time and just chopping around. Eventually, buyers gave it up, and prices start to go down. They fill the gap. It looks like maybe they're going to go up. Maybe they would have, but it fails, and they keep going down. So why should we think that this is going to be a low point in the day? Well, I was watching this options activity in SPX, and I see the volume beginning to increase more and more and more. The largest volume throughout the day. This is growing from early in the morning, 40,000, 50,000, 60,000, and 70,000, and so on. So we're looking at this 4280, 4275 area down here. It's getting late in the day. And one of the reasons why prices can reverse late in the day, especially on a Friday. Well, these options expire every day. There's a 0 day to expiration each day. So as prices are coming down here and those options are increasing in value, you know that it's a ticking clock to the end of the day where those options, they may become more valuable, but they may expire worthless if prices retrace. Now, put yourself in the seat of the options trader that is holding these puts, bearish bets, and they're increasing in value, and now they're finally in the money or potentially getting to be further in the money. If prices go down, they increase in value. Now, here's where the greed factor comes in, and it's like, okay, if this thing keeps going down, my profits are going to soar exponentially. Well, maybe. When we start utilizing this information with a price chart and start seeing, hey, big red bars that said that was going to go lower, and it starts to reverse, but we're focusing on this area. It's 4280 and it's 4275. And waiting to see if prices will reverse in that area. Now, the thinking is, put yourself in this option trader's seat. You've got a profit in these options. And if this thing starts to reverse, your options are going to lose value pretty darn quick. And you are going to close those options and take your money. And then the market maker that sold you those options is going to unhinge his position, and that is going to drive prices higher. Now, we don't know how high, really. We're assuming that it's going to work and it's going to drive it higher. It's a Friday, maybe less traders, here and at the end of the day, but sometimes these things can really soar. But our initial target was up here around yesterday's close, and then maybe it would have went higher. So how do we trade this? Well, once it begins to bottom, we look for price patterns that we utilize for our strategies. So we're putting together a strategy with this options, looking for a low, and now here is a normal old pullback type of pattern on the 2-minute, which is one of the entry points. The other was what we call a 1, 2, 3, 4, which is the one bar is a wide range bar, an igniting bar down here from this low point, and that suggests prices are going to go higher. The 2 bar is an inside bar. It's a resting bar after the wide bar, and sometimes it just triggers over the high of the red bar. We were looking for that, and it didn't trigger. It actually went down, and it took out the low, and that's what we call a 1, 2, 3, 4. Trades above that bar's high, you're in. And you can see how fast it moves. Now, you can't trade this because it's a cash index. You can trade options, but you can't trade this. You can trade SPY. You can trade the S&P contract. You can trade the mini S&P contract. What we chose to do was to trade the NASDAQ 100. Now, some used the leveraged TQQQ. Some, and here's the 1, 2, 3, 4. And that spiked up. Now, we were watching the S&P because it's coming up to yesterday's close, which I showed you. Some traded the NQs or the MNQs, the futures. So this was the setup. We were looking for the S&P to bottom, and then we traded the NASDAQ 100 through whatever instrument traders utilized in the green room. But we chose this one because it was showing relative strength. Now, we know it was showing relative strength because this is still well above the prior day's low. It was above the middle of the trading range versus if you look at SPY, it was pretty deep into it. So that was showing relative strength, and our thinking was that the NQs or the triple Qs would outperform, and things spiked up, and spiders came up. That red line is yesterday's close, which you can see is right there. It was also what we call minor resistance, and we sold into that area and began to trail stop under a prior bar's low. Got stopped out with a very nice profit on a very quick trade, and then we called it a day. So the lesson here is, if you watch the S&P 500 options and looking at the options activity, which options are trading the most volume? And if prices were going up, we could have looked at the call options. But as prices were going down, and they were going down for an extended period of time during the day and reached this reference point, we then began to look for a low point. The wide range bar was the igniting bar, looking for prices to go higher. It would have been great if prices would have continued higher, but that wasn't in the cards today. You just don't know. So you have to have management strategies along with your money management strategies. And so if you utilize this information, it's really, really helpful. Join us in the green room where we can talk more about this. And we do lots of swing trades as well as credit spread trades and other options trades. So hope this helps. If you have any questions, email me, Greg at Master Trader, and hope to see you in the green room soon.